clients and databases. The use of AI and algorithms is evident in the report and how they're influencing home loan processes, insurance premiums, and database storage and interpretation of information. The use of AI and algorithms have many benefits and opportunities, yet come along with many risks associated, such as privacy, cybersecurity, and ethical risks. These will all be discussed, and recommendations will be provided on how to mitigate certain risks. So, after researching fintech company Athena, who do home loans and all online. So with this, sort of the benefits and opportunities that come, they offer low and competitive rates compared to many other banks in Australia. And they say there's no ongoing fees and it's a fast application process since it's been completely online. But with the limitations, the criteria for borrowers is quite different to major lenders in Australia, and a lot of borrowers would get declined upon application because you have to have prerequisites such as a 20 or 30 deposit home loan, and then there's no offset functions, there's no branch access, and no support for government schemes. The data ethics risk, privacy risks, and security risks associated with this are also different from other banks, as the processes are completely online. The use of algorithms to determine if applicants are successful or not could be an ethical issue that Athena faces. The systems could have bias and applicants may be rejected just to these certain keywords or triggers that decline the application. The privacy of information gathered and analysed by Athena would also be greater than those of other banks, as all the processes are online. And the Perpetual Corporate Trust explain how they provide web security and privacy for Athena. And they're used for analytical models, credit analytics, and transactional software are said to be vigorously reviewed and audited. And this just reduces the risk of hacking and other information stealing. So for the task two, is the credit sense feasibility analysis. So with the opportunities of using credit sense, the implementation of credit sense will enhance the decision-making process. So through algorithms and AI, credit sense will give insights, and credit sense leverages AI to give insights from transactions and documents from clients. This can improve lending decisions, reduce bias, and enhance the overall customer experience. It's very time and cost saving as well. The use of this platform will approve loans faster and give borrowers answers sooner. And Credit Sense states that it enables clients to give them bank statements and documents as part of your application, and it can take as little as 20 seconds. They have automated assessments which can determine if applicants are successful or not, and they have such fast processes that allow customers to be satisfied. The use of AI allows the banks to save costs on employees, and the cost to initiate the program would be the cost, but in the long run, they'd save a lot of money. So with the risks, the data ethics, privacy, and security, the algorithms and AI may create biases, like I said earlier with Athena, and unforeseen errors. So clients may not understand how the algorithm and AI evaluates the application process either, and this could create problems as clients might be unaware they're being rejected, and the AI could be seen as a deterrent for future borrowers. And with the privacy and security, many risks sort of center around the storage and sharing of client information, as it's all online and being analysed to determine the application's success. The storing of this data is an issue, and you've got to be with the cybersecurity measures in place to ensure that clients' details aren't getting stolen. And for the recommendations, the governance of fintech is becoming very crucial, and the use of data storage now needs to be managed ethically for all organisations. And recommendations to the bank would be to ensure there is a team or a department organised with the relevant expertise to ensure financial data is safe and that the algorithms are operating to perfection. And the governance and auditing of the processes as well will allow for success if done regularly and compliantly. So for task C, with using data from connected cars for insurance decisions, the opportunity here for the insurers is using data from connected cars allows them to understand behaviours and patterns of drivers. There's an agreement between General Motors and LexisNexis that provides insurance companies with data from millions of users. This hence helps them set premiums and determine costs. And the benefit of this, it lets us know what drivers are doing in regards to help setting premiums for insurers. And the insurance companies set up pay-as-you-go premiums, which are a lot fairer and more cost-effective for both the driver as well. And the connected cars can prevent fraud and deception by individuals. The risk of this, so, is collecting data from cars and helping insurers make decisions come with certain levels of risk from data ethics, privacy, and cybersecurity. The privacy of drivers is being invaded due to being tracking where the drivers are and driving. And it also logs its speed and I suppose location. Um, and then Sichi explores how consumers aren't aware of the amount of data being used by insurers to determine insurance premiums for certain drivers. The data ethics may be at risk as well due to companies not being transparent and honest about what the data is used for. Um, and for task four, the graph database replacing traditional database system. So graph database stores and analyze complex information. Graph analytics platforms use algorithms to identify relationships and outliers with the data. So Tiger Graphs 2025 states that advanced graph database technology connects your data to real relationships that drive breakthrough insights. This demonstrates how innovation explores the relationship with data points and helps solve issues. For fraud prevention, the analytics go through accounts and information and detect identity theft and abnormal behaviors in real time. Limitations to this exist as well, which include privacy and compliance risks, and also bias in the AI. To use the graphs ethically and efficiently, organizations must follow compliance, have a governance in place to keep being innovative and proactive to deter cybersecurity risks. And for the references for this,